The Jared Dillian Show.
I'm Jared Dillian. This is the Jared Dillian Show. If you want to call to talk about your money, please call 844-305-7800. That's 844-305-7800. This is the Jared Dillian Show. It's Columbus Day, which is the least popular out of all the federal holidays. I didn't get to take today off. The stock market is open on Columbus Day, but the bond market is not. But the bond market's basically closed every day, so not really much of a difference. We're getting closer to the election. I view this with some equanimity. You're going to find this strange because this will get you into a fight in a bar. I don't vote. I don't vote in elections for a whole bunch of reasons. I could talk about that for an hour. We're not going to get into that here. I did vote 96, 2000, 2004. I think that's it. I haven't voted since then. I don't believe in it. But from a market standpoint, we're getting closer to the election, and the thinking on the election has totally changed. If you go back 4 or 5 months ago, everybody thought that Biden would be bad for stocks. Today, everybody thinks that Biden is good for stocks. The market was up a lot today. It's been up a lot lately. Now, I have a difficult time understanding that. So let's just kind of walk through the reasons here. And I guess the thinking is today that the Democrats will do lots and lots of stimulus and infrastructure and spend lots of money, which is undoubtedly true. And the question is this good for the economy? And the answer is no, because we're going to go into lots of debt, and it's a misallocation of capital and all that stuff. Is it good for stocks? Yes, it is good for stocks. It can be good for stocks and bad for the economy. A lot of people get that mixed up. They'll say Biden will be bad for the economy. And as it turns out, people think he's going to be good for stocks. He'll definitely be good for some stocks and not other stocks. So if we're doing lots of infrastructure, I mean, it's not hard to think of some companies that could possibly benefit from $1.3 trillion in infrastructure spending. And one of them is Caterpillar, which makes heavy machinery. But it's good for a lot of stocks. And I explained this to my colleagues at Lehman Brothers years ago when Katrina hit. And Katrina hit, and the stock market went up. And everyone said, that doesn't make any sense. This hurricane has caused billions of dollars of damage, destroyed an untold amount of wealth, and the stock market is going up. And I said, yes, what's going on here is that companies in the S&P 500 would be tasked with rebuilding, which would cause their earnings to go up. It's the same situation. The hurricane was bad for the economy, but it was good for the stock market. In fact, really the only stocks that it was bad for was the insurance companies. Insurance companies got annihilated. So I want to talk about something called the broken window fallacy, which we've discussed before. I want to talk about it again. This is from a French economist named Frédéric Bastiat, a free market economist from France in the 18th century. And he came up with this scenario where you have a baker in his bakery, and the baker is baking, and a kid outside throws a rock through the window, breaks the window. So the baker says, I have to hire somebody to fix the window. And he hires the glass guy, which is the glazier, but we'll just call him the glass guy. And he hires the glass guy, and he pays him $50, and he fixes the window. And if you're watching this from a distance, you're like, the kid breaking the window actually boosted the economy. It actually boosted the economy. So there's a whole school of economic thought called Keynesianism, which is basically based on this idea. Like Hurricane Katrina boosted the economy. But that's not how it works. How it works is, you see, the $50 that the baker spent to fix the window If the kid hadn't thrown the rock through the window, what else would he have spent the $50 on? And that would have been a better allocation of capital. If Hurricane Katrina didn't destroy New Orleans, what else would all that money to rebuild have gone to? Something that's better than building New Orleans. So that is the broken window fallacy. And we see the broken window get fixed, and we see economic activity, and the income of the glass guy goes up. Now, if the glass guy is a publicly traded company, then the stock will go up. It's pretty simple. Now, the other side of this is that if Biden gets elected, taxes are going to go up a lot. I was working on this today, working on a piece on the capital gains tax, and the market does not seem to care. And I don't know if the market will care. You know, this is something I got wrong. I'll totally admit it. 4 or 5 months ago, I said political risk is going to start to get priced in. Biden's tax hikes are going to be priced in. The market's going to go down. It didn't happen. I was wrong. Maybe that happens at some point in the future. I don't know. By the way, the stock market is telling you that Biden is going to get elected. Okay, you can look at the polls, and the polls are in Biden's favor. But aside from the polls, the stock market is telling you that Biden's going to get elected, and all you have to do is look at an ETF called TAN. TAN is a solar ETF. TAN is up 400% in 6 months, and it's up almost 50% in the last couple of weeks. This would not be happening if the market thought that Trump was going to get elected. Now, if Trump wins, then what happens? Well, we don't really know. Trump has said there's going to be a tax cut. I have no idea what that's going to look like. My guess is that there's going to be infrastructure spending as well, possibly as big as Biden's, and there's going to be more stimulus, which means we're kind of looking at the same thing no matter who gets elected, which is why stocks are going up. And it's why bonds are going down, because the Treasury is going to have to issue trillions of dollars in bonds. My fear here is that we're going to become like Japan. Now, we have debt to GDP of 106%. Japan has debt to GDP of 240%. They have more than twice the debt that we do. They have great infrastructure. They have bridges all over the place. And they also have a bond market that doesn't even exist. And the Bank of Japan owns 30% of the Japanese stock market in the form of ETFs. And this is why finance and economics are so important. They determine history. Now, you might say, who does Jared Dillian want to win the election? Is nobody a choice? Well, let me put it this way. I am what you would call a single-issue voter. I don't want my taxes to go up. But I really don't want the country burned down either, so there is that. Since we're talking about controversial stuff, let's talk about coronavirus for a bit. Now, everybody knows the economics effects of coronavirus. It's been devastating, and we did lockdowns for a couple of months, and the lockdowns are being lifted in dribs and drabs, more in some places, less in others. If I were looking at this as an economist, I would say that the lockdowns are a very expensive way to deal with the problem. They're an effective way to deal with the problem, but they're a very expensive way to deal with the problem. And I'm talking about economically, but I'm also talking about in intangible things like domestic violence and alcoholism and stuff like that. And I would say that masks are a very cheap way to deal with the problem. Not as effective, but infinitely cheaper. And some people don't like wearing masks, but I mean, from my standpoint, it's not much of an inconvenience. And if it's a choice of that or locking down the entire economy, I will take the mask. Now, we spent some time talking about this a couple of months ago. There's a school of thought that we need to hit herd immunity in order for this to be over, or we have a vaccine. One of those two things. We hit herd immunity or we have a vaccine. It's actually not entirely true. We only need to hit what's called the disease break point. which is about an infection rate of 15 to 20%. Now, if you remember from a couple of weeks ago, there was an exchange between Rand Paul and Dr. Fauci, and they were talking about herd immunity. And Rand Paul didn't really have the vocabulary to describe what he was referring to, but he said about New York, he's like, maybe they have herd immunity. And they had 15 to 20% infections. And Fauci admonished him and said it's not herd immunity, but what Rand Paul was really talking about was the disease breakpoint. It's not a coincidence that once you got to 15 or 20% infections that the disease went away in New York. New York has definitely hit the disease breakpoint. Yes, they have an increase in infections there right now, but it's very small. Very small. There is this concept known as the last mile. If you are a cable company and you're laying cable all over the place, it's very expensive to go all the way out into the country and install the last mile of cable. It's going to be very expensive to get infections to zero. We will kill ourselves trying. We can only hope to get infections to a low level, and we're going to have to deal with it. I saw a movie in a movie theater. I forgot to mention this. I saw Tenet in the movie theater. There were like 5 people in the movie theater. I work by myself all day. I am not too worried about infections. I would also have no problems flying on a plane, except I really have no place to go. It's all about risk management, something which we talk about on the show all the time. You have to manage your risk. Staying inside your house for 7 months and not going outside is not managing your risk. I'm Jared Dillian. This is The Jared Dillian Show.
The Jared Dillian Show.